Welcome to everyone tuning in, and thank you for joining us today. My name is Jillian Perkins. I'm the Director of Communications at Arnerich, Massena, a Portland-based investment advisory firm bringing our unique and disciplined process and philosophy to high-net-worth individuals and families, nonprofit endowments and foundations, and corporate clients. Today, we bring you Tectonic Shifts in the Investment Landscape, Investment Trends to Watch For in 2020. So each year, we gather together our research and analytical team to talk about what we see coming for the next year. What are the major trends in culture, economics, and politics that could affect the investment landscape? And out of that discussion, we compile our investment trends list. So keep in mind, these are not intended to be investment recommendations, but they are an interesting look into the potential future environment that investors will be facing in the coming year. So today I have with me Senior Research Analyst Arthur Coyne.
Hello.
And Research Analyst Melissa Liu.
Hello.
Both from our research team to share their thoughts and insights on our investment trends to watch for in 2020. So just as a brief introduction, we call this year's list Tectonic Shifts in the Investment Landscape because as we look toward 2020, the pace of global changes is accelerating and the tectonic plates, so to speak, under the investment landscape are constantly shifting with these rapid changes. Last year we talked about robotics and machine learning, and this year we've jumped to artificial intelligence and quantum computing. Last year we saw the first trillion-dollar companies, and this year we're seeing billion-dollar IPOs, also called unicorns, which have become a thing. So with potential political changes, definite technological changes, and the enormous cultural changes as the next generation takes control of the wealth, the political machine, and the economy, 2020 changes are likely to eclipse 2019 changes. So with that, let's start with our first trend, which is investing as politics. So what does this mean?
Well, this is probably one of the biggest things that we've been seeing in the past few years. There's been a sea change going on. People, citizens, investors have been seeing that the world's population has been rising, and there's these huge inequalities and these challenges that we're trying to face. And they haven't been seeing the kinds of results that they've been looking for coming from government's action. And there's been a disappointment. And if you look at the polls, people's confidence in government, whether it's Congress, the president, or even institutions such as schools and religion, is at near all-time lows. And people are very concerned that the basic needs of humanity are not being provided for by these institutions.
Yeah, and that's where we see a lot of private companies actually stepping in and making these investments kind of on the government's behalf, right?
Right, exactly. And so as we move into 2020, we're seeing the idea that changing the world through the ballot box is kind of becoming not quite an antiquated idea, but it's just one tool in the toolkit. And people are reclaiming the power of using other tools, such as their economic power, their investments, to help bring into reality the world that they want to live in. Right. So, and we're seeing that not just at the personal level, we're also seeing this happening at the national and international level, where we're seeing more and more use of economic sanctions, tariffs, and even veiled economic threats. So while, to wrap it up, while we see there's a kind of a sad aspect of people losing faith in their government, we're also really excited to see people reclaiming their power through their economic activity.
Great. So along with politics as investing as politics, one of the major trends that we anticipate is seeing China in the news. And of course, it's hard to predict what's going to happen, but definitely some headlines around that. Do you guys want to talk a little bit about that?
Yeah, definitely. I mean, I think despite the very, very public trade war and the tension between the United States and China right now, I think we can actually see the Chinese government actively opening up their markets for foreign investors. I mean, they're relaxing regulations. They're really concerted efforts to eliminate corruption and intellectual property theft, which has been a huge issue for the United States. Like Huawei, that was a huge deal And that tension, you can see the Chinese government actively trying to do something about it. I mean, they've eliminated some quotas on foreign investors. They've really deepened their stock market. And this year, we saw the RMB-denominated bonds officially join the Bloomberg Barclays Global Aggregate Index. And it was in April of 2019. And so you can see these actual efforts of China to make it available for foreign investors.
Right. And, with a population over 1 billion people, that's an enormous opportunity.
Exactly. It's not only like one of the biggest country in terms of population, we see a huge millennial growth, right? They have the biggest population of millennials, and they consume a lot. And so as China really transitions from a manufacturing to a service economy, it's a really big opportunity set for investors. Right. But this is not to say we don't see headlines of actual political tension, right? There's a lot of issues, especially in terms of the trade war, that have been coming up. And the deadline for a trade agreement and deal is coming up really soon, December 15th. I think that's next week.
Right.
And our stocks are feeling that. Apple started this week pretty low because, like Tim Cook says, it's 100% about iPhones and 100% about China. It's a huge deal. Yeah. And so it's really important for investors to look at China from a long-term investment horizon. And also, I mean, in spite of that, make sure they diversify their foreign investments.
Right. That seems key with having geographic diversification in order to take advantage of opportunities in China and in foreign and emerging markets in general.
Exactly.
So the next trend that we want to talk about is that we anticipate that we will see changes in what people invest in, but also in how they invest. In fact, we're seeing some new investment structures emerge. So can you talk a little bit about that?
Sure, absolutely. Not many people realize, but that since 1996, the number of stocks listed in the U.S. public stock market has declined by about half. And why has that happened? Because companies have either merged or they've gone private. And this has led to a situation where investors who want to get high returns have to look more and more to private markets and to other less liquid investments.
But those private markets, they're really hard to get into, right?
Right, exactly. And that's where interval funds come in, because interval funds are a type of closed-end mutual fund that periodically offer to buy back a portion of their outstanding shares from the shareholders. So that gives investors liquidity, yet they still have the opportunity to earn the high returns that illiquid investments can offer them. So it's this great trade-off and getting the best of both worlds of pretty good liquidity and good return opportunities. And that's, I think, going to be make interval funds like a household word going into 2020.
Oh, wow. So greater accessibility for all investors.
Yeah, exactly. It makes it available to everyone. Yeah.
That's fantastic. So let's talk about our next trend, which is negative yields. So right now, almost a third of global bonds bear negative yields, not necessarily in the U.S., but across the world. What does that mean for investors, and what should they be thinking about in 2020?
Yeah, the idea of negative yields is really counterintuitive. I mean, who would ever willingly buy a bond, which is essentially like a CD, that knowing that they would get paid back less than their original investment?
Exactly. You're essentially choosing to lose, right?
Yeah. Right. Yet it's become the norm in Europe and Japan. There's now about $17 trillion worth of negative yielding bonds worldwide.
Wow.
But fortunately here in the United States, bonds are still giving positive yields, roughly in the maybe 1% to 3% range. But, taken in isolation, that seems pretty good. But once you factor in inflation and you realize that your purchasing power, loses about 2% a year to inflation, you're treading water. You're basically lucky to break even and get a zero return.
Yeah, it's like you make a 2% return in a year, but there's also 2% inflation. What's the point of that,
Exactly.
Right?
Yeah. And, the worry is that if bonds can't even preserve your wealth, it can lead to loss of confidence in the currency itself that the bonds are issued in. So that could turn out to be, in 2020, a source of volatility, currency volatility, as people start to question the underlying currencies. So, we see investors responding to that by seeking out like alternative capital preservation investments, things such as real estate, maybe hedge funds, or like we mentioned earlier, interval funds.
Great. So there are some solutions out there as we head into this dangerous territory.
Absolutely.
So as we switch to our next trend, this is sort of a hard turn into technology and the digital revolution. Last year, it was all about automated vehicles and self-driving cars, and this year we're looking at some even more major things like artificial intelligence and quantum computing. So with all of this technological progress, are there things that investors should be aware of or that they can expect in 2020?
Some big headlines. 5G is rolling out. Samsung had a huge 5G rollout this year. And people think that Apple will probably be rolling out 5G around 2021, which actually did pretty well for their stock when the analyst said that.
Wow.
The Internet of Things, so basically everything on one platform, not really need to talk to anyone or like have any other companies go between. We see Microsoft, Apple, Google, Amazon, they're all really coming out with these products that make it so you don't have to really go anywhere else. You see like Alexa, you see like the HomePod, you see, I think maybe that's what Apple's is called too. They all have very similar names, but the whole point is that you really don't have to go to another company to have the full experience.
Right.
So is it all about just controlling the platform?
It really kind of is, and this is especially seen when you see these big companies really buy small companies. You see Yahoo buying Twitch, which is a gaming platform. You see Google buying YouTube, a really popular streaming video net platform, and Facebook buying Instagram. So these companies aren't really just targeting our hardware per se. They're really targeting our whole user experience.
Right.
Trying to make it a single streamless lifestyle, essentially.
Right.
And yeah.
So where do they go from there?
Well, from here, there really is, this is where artificial intelligence really comes in. Like, we hear this word all the time, but it's actually not used that much intense, like right now. Like, artificial intelligence, we see that in our phones. So basically, our cameras are a little nicer, our Siri might work a little better. But as these companies start to make data, so they start making synthesized data, we're going to really see artificial intelligence become a huge player in the investment world, I would say, next year.
Right.
So is this all good, or is like a downside to that?
The downside, Arthur says. That's a huge thing, right? Cybersecurity is now the poster child of...
Yeah. They have access not just to your banking, but to your grocery
exactly.
list
Now they're making data
home
too.
security.
Exactly. Like Arthur said, there's a really big downside. And so now there's an increased need for preserving this privacy and information security. We see a continued pattern of data hacks and data breaches. Like Facebook saw a breach of 540 million users' data. First American Insurance had exposed $885 million in financial records on public services. Wow. And so as data collection is becoming more and more ubiquitous, that means there's a really great opportunity for securing this data. Yeah. And investors should look forward to that.
Nice investment opportunities.
So there's opportunities on both sides.
Really, on both sides, on the actual data creation and how to do that, but also protecting our personal private data.
So one of the things with the Internet of Things and all of these high-tech changes, they haven't necessarily reached everywhere yet. And so our next investment trend is about rural areas. There's been a lot of focus on urban growth and urban development, and now there seems to be a shift towards some of the areas that have gotten less attention over the last decade or so. So what are some of the opportunities that we're seeing in more rural areas of the country?
Well, for contrast, like we've seen our big cities grow immensely, right? They've become so saturated and plagued with high costs of living that we're almost forced to look elsewhere. Rural communities are looking really attractive for investment right now. They really have lower overhead costs, but they also have extreme potential for growth. And so like you said, not all things have gotten to rural community internet, which what we consider basically like an essential. It's not really a luxury, it's a need. It's a basic need. 30% of the United States rural population doesn't have access to broadband internet. Wow. 35% of the population in indigenous communities, like on indigenous land, they also don't have access to broadband.
Oh my goodness.
Exactly. It's a really big deal. Bernie Sanders, presidential hopeful, he basically announced that he wants a huge $1 billion initiative investing in internet for everyone.
Wow.
USDA just rolled out another $1 billion initiative. It's a big deal, and it's the government's noticed, and private investors have noticed as well. It's not just internet. It could be like other forms of tech and also medical, healthcare.
Right.
It's all types of access that really makes rural development a really big investment opportunity, but also, I guess, moving into rural communities is also a really big opportunity.
Oh, yeah. So another important trend that we think we'll see next year is a return to fundamentals. So tell me why that is and what that means for investors.
Sure. Well, ever since the global financial crisis, the Federal Reserve's been stimulating the economy and providing money at a very low rate. And, it's worked. U.S. stocks have quadrupled since that time. And a lot of the leaders in that cycle have been the really fast-growing technology companies who've been nimble enough to take advantage of the easy supply, that the cheap money that they can use. And so in the past 10 years, 9 of the past 10 years, stocks have gone up. So there's been a lot of momentum building up in the market and a lot of exuberance over this, the idea of just continued relentless, rapid growth.
Right.
And that's been very appealing. But lately, in the last year or two, we've been seeing signs that momentum and exuberance is starting to show signs of cracking. And in 2020, that may be the pivoting point where we see the tide turn in the other direction. So for example, like in 2018, more than 80% of the companies going public in the United States, they were losing money in the 12 months going into their IPO. So that was a sign. That's a sign that things were getting maybe a little bit too frothy, right?
Unicorns that we talked about before.
Yeah, the unicorns, right. So this year, unicorns, Uber, Lyft, WeWork, they IPO'd, but they kind of stumbled coming out of the gate. It wasn't as successful as people had hoped. So, going into this next year then, we're thinking that pendulum will swing back and investors are going to realize, fundamentals really matter. You need to think about your profit margins. Is the company's government good? Is the management good? What's the strategic direction? All those kinds of fundamental things that really make a difference in terms of whether the company will be profitable.
Makes sense.
Yeah, not just eyeballs, clicks. Having a flashy Elon Musk demonstration of your new product. The fundamentals, like Arthur said, we're really going back to that.
Yeah, that makes a lot of sense. So 2020, of course, is an election year, and so we can't talk about 2020 without addressing the election. Correct. This year's presidential hopefuls are floating some policy ideas that could have really significant economic repercussions. So tell us a little bit about what you're seeing and what could change the landscape for us even more.
Oh, absolutely. This is a real big story because things are much different now than they were 20 years ago. We're seeing, and studies are showing this, that the U.S. political divide is getting much wider, and especially in this last decade or so, with the Democrats and Republicans taking really significantly different positions on, basic issues of, the environment, foreign affairs, social issues, economic equality, all those kinds of things. Democrats' proposals, going into 2020 are focusing things on such as, universal health care, education, the environment, and critically, higher taxes on the wealthy.
Yeah, well, you see Republicans really focused on just pure economic growth, deregulation, conservative social issues, and a more foreign independent policy. So pretty different.
Yeah.
And, we think these ideological battles are going to make for a really exciting and pivotal election. But the question is, what should investors do?
Exactly.
Right?
Right. Exciting, but it's not fun to think about
and it's kind of a binary event. So it could lead to some volatility. So at least in the short term, right?
Right.
And so, what do we recommend that investors do? That's the key question. And there's two big takeaways, I think. First is keep a long-term investor perspective.
Right.
That's the goal. Most investors are investing for the long term, the retirement or some long-term objective, to stay focused on that objective. And then the second is, review your policy and diversification. Is your portfolio well diversified for the purposes that you're trying to achieve?
Right.
And to do that, to do those things, I think the key is to work with an advisor, get that help. Yeah.
That's
That
a lot of
makes lots of
information
sense.
to take in.
Right.
Yeah.
So before we wrap up, are there any last thoughts that you have about 2020 and any advice that you want to offer for investors as they look towards January?
Oh, I'd say in January, just delete this podcast and look for a new one.
Exactly.
Because things can change a lot
Things will
between
change, I
between
know,
now.
right?
I mean, month to
Presidential
month, there's a lot of
candidates.
binary events
Yeah.
between now and then. So
That's
everything
true.
will change.
Think long term.
Yeah, thank you.
Right.
Good point. Wonderful. Well, that wraps up our 2020 investment trends to watch for, tectonic shifts in the investment landscape. I want to say a huge thank you to Arthur Coyne and Melissa Liu for sharing their insights today. Thank you guys for being here.
Oh, thank you.
Thanks.
You can read the complete investment trends article and find more information on our website at arnerichmassena.com. And we wish all investors a very happy new year. May your portfolio strategy be thoughtful and disciplined in the coming year. Thank you so much for joining us today.
Thank you.
Thank you.
Thank you for listening to Arnerich Massena's podcast. Please see the podcast description for important copyright and disclaimer information.